be patient if you're not in it, if you're thinking about this trade. It's no secret that energy has been working, so it has become a crowded trade. There's a lot of people talking about it being a crowded trade, and we don't disagree. It doesn't mean we can't go higher. Hey everybody, it's your boy Chicago Sean McLaughlin. I'm the Chief Options Strategist at All Star Charts, flying solo with the options trade of the week this week. Boy, the whole team's had a busy couple of weeks. We all got back from Washington, D.C. We attended the Chartered Market Technicians Annual Symposium in Washington, D.C. last week. It was a lot of fun. Had the whole team together. Saw a lot of old friends. It was the first time for many of us to be out at a proper business function coming out of the pandemic. So anyway, lot going on. We've had a lot on our plates today. So it's just me. So we'll keep it short, we'll keep it sweet. I want to catch you up to date on today's trade of the week, options trade of the week. We got into mobile. So Izzy, if you want to bring up that mobile chart here that I've got, this is the chart we've been looking at. Me and Straza were talking about it this morning. We love this chart. It doesn't really zoom. If we were to zoom in and see it on a daily chart, you would see that, man, the last few weeks, we've, the bulls have been tested in the energy space, right? Like, so energies and oils and materials have been the names that have been really doing well in this market environment since the beginning of the calendar year. But they've been tested. 2 weeks ago, we had a pretty vicious sell-off. It kind of shows up in this chart here. It's kind of, if you squint, you could see it. But this move here, as well as this move here about 2 months ago, we saw opportunities for the hot money to take profits off the table in these energy names. It's no secret that energy has been working, so it has become a crowded trade. There's a lot of people talking about it being a crowded trade, and we don't disagree. It doesn't mean we can't go higher. And in my perspective, I feel like the recent sell-off we had 2 weeks ago, as well as the recent sell-off we had about 2 months ago, I feel like really has relieved the pressure of the hot money, allowed a lot of the hot money to escape. And what's left are strong hands. People who believe in this trade, believe that maybe, just maybe, we're at the beginning of a commodity super cycle, perhaps. Either way, I'm loving this setup. I'm loving the way it's held up over the last couple of weeks. And the two things that I really love about the Exxon Mobil setup is right now we are breaking out to 4-year highs in Exxon Mobil, and a 10-year high is within spitting distance. It's not too far. I think it's about right around like 112. This chart is as of yesterday's trading action, by the way. This does not include today's strong rally we saw in a lot of stocks coming out of the Fed announcement. Exxon traded into above 91, I believe. We got into this trade this morning, and what we did is we bought a bull call spread in September options. We bought the 90 calls. We're selling the 100 calls against it. Why am I selling the 100 calls? Well, big reason why I'm selling 100 calls is, going back to the chart here, $100, we talk about this all the time. We talk about the $100 roll, right? The $100 roll, we like to say. And a typical traditional $100 roll is when a stock crosses 90 and approaches $100 a share for the first time ever. So it's like an all-time high. That $100 price target or level just seems to act as a magnet for prices. Traders just can't resist bringing that stock up to 100, and it'll often overshoot. All right. And that's true at big round numbers like 200, 300, 500, etc. Okay. Now with ExxonMobil, it has traded at 100 in the past, but it's been 10 years or so. So I really like the odds of this stock trading up at least to 100 in the near term, which is why I chose the 100 strike to sell, just because I feel like it's going to be a magnet. So we bought the September 90-100 bull call spread. We paid $360 for it. I think it's a little bit more now because the stock has gone up, ripped higher into the end of the day, like everything else. I think it might be trading around $380 right now. But look, be patient if you're not in it. If you're thinking about this trade, don't chase it. You might have better opportunities later on, but we paid $360 for it. The most we can make is $640. Now, that's only if I hold this spread all the way into expiration. That is not my plan. My plan is to get out when I captured half of this maximum gain. So half of this gain would be $320. Add $320 to the $360 I paid. I'll be looking to get out of this trade around $6.80. When I can exit the whole spread for $6.80, I will do so. That represents a almost doubling of my invested capital. And it means I've taken out 50% of the maximum possible gain without having to hold this trade all the way until September. I don't want to hold this position all the way until September if I can help it. Okay, I'd rather just take the money, move on to the next trade. For risk management point of view or perspective, 82 is the level I'm leaning against. It doesn't show up that great on this chart, but 82 kind of corresponds right below these recent lows of the last few weeks. If we can't hold on to 82, if we see any close below 82 in the shares of XOM, that's my signal that I'm either early or wrong in this trade. Either way, I want out. I will close the whole thing down and minimize the risk of any potential further losses. So that's it. That's the trade of the week this week. I hope you guys find this interesting. You can find our blog post. Just go to my Twitter stream at Chicago Sean. You can find more details on this trade there. As always, if you have any questions, hit me up. I'm happy to help. Trading well, everybody. Have a great trading day. Take care.